Welcome back to the channel, everybody. I am Mick Alphanim. Let's begin here. We have a little news here on finbowl.com. Shout out to everybody out there for tuning in. I appreciate you. This article is titled, Supreme Court Supports Ripple's Argument in SEC Case. All right, so let's read this little tidbit here. It says, as the summary judgment approaches in the high-stakes legal battle between Ripple and the Securities Exchange Commission, legal experts continue to speculate about the potential outcome. We're speculating as well. While the final verdict remains uncertain, valuable insights can be gathered into possible resolutions from other ongoing legal disputes involving similar firms. In this line, Stuart Alderati, Chief Legal Officer of Ripple, in a tweet on May 19th, shared a significant development that could potentially reshape the interpretation of securities laws in the digital age. Major things have been happening as of late, and I'm very excited about it. Alderati highlighted a recent Twitter opinion by the Supreme Court, emphasizing the crucial role of adapting legal factors from previous cases to suit the evolving landscape of the new world. This recognition aligns with Ripple's central argument, asserting that the Howey test and its accompanying statute should be interpreted within the common law framework. Once again, we all know if this goes to Supreme Court, we're going to dominate. All right, so now let's just read this a little bit here from the actual tweet by Stuart Alderati. Says here, Friday is for the legal nerds. Yesterday, in its Twitter opinion, the sub-CT made clear that you don't just mechanically apply factors from an old case. You must adapt them to a new world. That's powerful from the Supreme Court. Not only that, imagine all the other courts that they have influence over that may actually go by what they're saying there and come into compliance, or rather alignment, with what their thoughts are from the Supreme Court. It says here, you must adapt them to a new world by looking at the underlying statute and the, quote, soil of the common law that comes with it. This is consistent with Ripple's argument. Okay, so then it reiterates what we read from the actual paragraph above. So now let's move on to another article here. Hope everyone out there is having a good Saturday, doing well, having some peace of mind, building some inner strength, things of that nature. All right, I know you all out there are doing well. You're a bunch of champions out there. That's how I feel. So this article here is from zcrypto.com. By the way, shout out to Keith, shout out to Matthew, Ahmed, Corey H, Love Life 22, everybody out there. I appreciate every single one of you, okay? That's just people I can remember off the top of my head. It says here, XRP lawsuit, Ripple and SEC request additional time to disclose Hinman files. Is a settlement looming? It says Ripple and the U.S. Securities Exchange Commission have jointly requested additional time to disclose the Hinman documents, raising speculation about a potential settlement in their ongoing legal battle. In a Friday, May 19th letter to District Judge Annalisa Torres, both parties argued that the voluminous nature of the materials and the necessary redactions necessitate more time. Notably, while the original deadline has been set for June 6, 2023 by the court, the parties saw a 1-week extension to June the 13th. This development follows a recent decision by Judge Torres to deny the SEC's motion to seal the Hinman documents earlier this week. On May 16, Judge Torres ruled that the documents were judicial and subject to a strong presumption of public access. The decision was welcomed by Ripple CEO Brad Garlinghouse, who called it another win for transparency. We read that before. The documents in question are tied. Well, we know what it's tied to. All right, we know where that's going. A settlement on the horizon. We'll read this little tidbit here. Once again, it's on zcrypto.com. If you want to see the full article, check them out. They're doing a great job. Meanwhile, following this week's events, the possibility of public access to these documents, has added fuel to the speculation about a potential settlement between Ripple and the SEC. Quote, whiff of settlement talks. Since this is a joint filing, the SEC does not want the Kraken released here. Still feels most like a mutually beneficial delay to work on settlement, unquote, tweeted long-term Ripple supporter Hugh Breslin, Here's another quote. It says, quote, "My thoughts exactly," unquote. Another Ripple proponent wrote, replying to Breslin. All right, so, we'll see. Look, whatever's going to be positive for not only Ripple, XRP, and the bank coin community as a whole, because all of their use cases are so similar, I'm all for that. I will say that I definitely prefer to beat them outright. But if this is going to be able to move forward and free up XRP and we can gain some clarity and then we can start to, have a little bit of fun, I'm all for it. So we'll keep our eye on this as things develop. All right. So here's a little joke. A guy, he's in his apartment. He goes out to his balcony. It's a little loose. He falls off. The floor below him catches him by the arm. He says, "You hold any XRP?" Man says, he looks up, he says, "I don't have any XRP." So a guy drops him. Next floor, another guy catches him by the hand. He says, "Hey, you have any XLM?" He says, "I don't have any XLM." Drops him. Next floor, "You have any Algorand?" "I don't have any Algorand." Drops him. So he's falling. His whole life is flashing before his eyes. He's thinking, "Oh man, it's over for me." One more guy catches him. Before the man can even speak, who caught him? The guy who was falling, he says, "I have XRP, I have XLM, I have Algorand." And the man that caught him looks right at him and says, "That's too bad. I'm a Bitcoin maxi," and drops him. I mean, it's a joke. It's a joke. Here's another little bit of Ripple news. So much Ripple news coming out lately. It's insane. This one here is from U.Today. And it's titled, "Ripple Wins 2 Digital Currency Awards." It's very interesting. Then Stellar just won some awards as well. All these bank coin companies are just dominating right now. This is very good visually. It says, the veteran digital assets company Ripple scores two prizes as a symbol of recognition for its innovations and leadership in the segment of central bank digital currencies. This success follows a major CBDC platform announcement by the U.S. Decacorn. It says here, according to a statement shared by Mary Hill, Ripple's head of marketing for CBDCs, the company became the winner in 2 nominations at the Digital Currency Conference 2023, a prestigious cryptocurrency event that took place in Mexico City. Shout out to everybody there in Mexico City, in Querétaro, in Merida, in the Yucatan. Shout out to everybody out there, all right? Hope you're all doing well out there. Well, I know you're doing well out there, all right? So now, it says senior Ripple executive James Wallace, who is the vice president of central bank engagement, scored the digital currency leader of the year status. Ooh, James Wallace has been on fire the last 2 years. It says prior to joining Ripple on May 19th. Okay, so we know James Wallace's background, right? It says also Ripple CBDC unit received the best sustainability award for digital currency. So pretty much what we've been seeing is that we're getting confirmation that Ripple is the best. Obviously what they've chosen is also the best, the XRPL. And it says here, it says backed by AWS, Stellar, Visa, and Fireblocks, and sponsored by Currency Research, the conference was organized in Mexico City. So see, look at this. Backed by AWS, Stellar. Listen, they're all on the same team. I've been saying this since I got in here. They're all working together, interoperability. They don't step on each other's toes. I have to say that because all these articles been coming out the last month saying, oh, Stellar's a rival to Ripple. They're rivals. They're not rivals. Oh, they work together so beautifully. They're in all the same corridors together. They're at all the panels together. All right. And that money is going to flow. Theoretically speaking, if everything goes well, everything goes according to plan, that money is going to flow seamlessly. That's what interoperability is all about. Right. So now let's move on to another article here. So we have to keep up with what's going on with the fiat currencies and the economies of the world. So this article here is from Watcher Guru. It's titled 30 countries now ready to accept Brics currency. So according to the latest report, 25 countries are ready to join Brics and accept the new currency for international trade. The countries that have shown interest to join Brics, the Brics Alliance, are Afghanistan, Algeria, Argentina, Bahrain, Bangladesh, Belarus, Egypt, Indonesia, Iran, Kazakhstan, Mexico, Nicaragua, Nigeria, Pakistan, Saudi Arabia. Boom. I hope for the best, but I prepare for the worst, right? So, I mean, it's just something you have to keep your eye on. Like, if our capital can be affected by these things, I want to know about it because I want to protect my value, right? So anyway, let's continue on here. It says Saudi Arabia, Senegal, Sudan, Syria, the United Arab Emirates, Thailand, Tunisia, Turkey, Uruguay, Venezuela, and Zimbabwe, who just released a bunch of gold tokens, by the way. They told it, IMF tried to stop them. They couldn't stop them. It says Brics comprises sorry about that. Brics comprises 5 countries. Oh, well, we know all that, all right? It says here, if this many countries ditch the dollar and begin cross-border transactions with a new currency, the US dollar could be hit. Could be. We'll see. We'll see. The dollar could weaken on a global scale and find no means to fund its deficit. And that's what I'm watching for. That's what I'm watching for. We've already seen France, because some people will say, well, Europe is, it doesn't really affect, countries in Europe. France already is getting on board with the idea. Isn't Germany also in talks? Not to join BRICS nations, but to keep relationships smooth with those countries. I think I read something like that. That could have been inaccurate. That could have been inaccurate. But what I'm saying is there's a lot of pressure that can be put and is being put on European nations. And one can only speculate about how they're going to respond to that. Right? All right. So it says the dollar could weaken on a global scale. See, and that's one of the reasons why, listen, I've been heavy into gold for a while now, and I'm not telling anybody to get heavy into gold. Gold, platinum, silver. Okay, I think I have the most fun with platinum, to be honest, right? Even though it can be quite volatile. But just in case, I'm well balanced. I try to stay well diversified just in case something does happen with the dollar. I don't really have to worry about it too much. And, we got into gold at a low, right? So we don't really have to worry about these little fluctuations right now that happen with gold. It's nothing major in my humble opinion, especially considering what is to come, where they're predicting now a severe recession. This is what they say, a severe recession. Come on now, just say depression. Just say depression. Right? They went from a mild recession to now I'm seeing these articles written about a severe recession. I think I have one up here somewhere. I read a couple the other day. But anyway, let's continue on. The countries that are interested to join BRICS are also oil-rich nations. All right, so now let's stop right there. Let's continue on. And you know what? I'm going to slide this one here because I see it. I see one of these. I have so many tabs open. So this one here is from finbold.com, and it's titled Severe Recession. I wanted to get one of these in here. I'm surprised I saw that. You ever have so many tabs open that they're like tiny? It says, over the past few months, the likelihood of a recession in the United States economy has increased, coinciding with the Federal Reserve's efforts to address the challenge of containing inflation amid mounting concerns. Bloomberg senior commodity strategist Mike McGlone has asserted that all indicators suggest an inevitable recession on the horizon. According to McGlone, the economy is tilting towards a recession, pointing to factors such as the Federal Reserve's tightening policies, underscored by the interest rate hikes. He said during an interview with Blockworks Macro on May the 17th, quote, "We are tilting down towards a severe recession that hasn't even started." This is an individual from Bloomberg, so this is reputable, right? Severe recession. Says that hasn't even started, and all the indications are right now. There's nothing I see on the radar up close that what can stop this downward trajectory at the moment, unquote, he said. He pointed out that some indicators include potential earnings contraction, stagnant market performance, declining natural gas and copper prices. No, that's true. And historically low unemployment rates. At the same time, despite expectations of a turnaround, once the Federal Reserve implements monetary easing in response to its tight policies. The strategist predicts that such a reversal is unlikely based on historical patterns. Indeed, he projected a challenging future for most investment products, such as cryptocurrencies and equities. We were talking about this before. Impact on cryptocurrencies. Moreover, McGlone anticipates a challenging phase for altcoins, foreseeing a substantial correction as the stock market undergoes a downward trajectory. The strategists also offer insight into Bitcoin, suggesting it is poised to establish a new bear market bottom. Look, this is one individual's opinion, but like I said, I have read 3 other articles similar to this. We will see. We just stay on top of the catalyst. We stay prepared for everything. We protect our value. We try to find ways to make money, to bring in capital, no matter what. We look for solutions. And there is always a solution. It may not be easy. It may be difficult, but there's always a solution. And the good part about us is we're willing to put in the work to make the solutions work. All right. All right. So now let's continue on here. So he goes a little bit more into Bitcoin and such. I don't want to go that deeply here. For the rest of the article, once again, it's on finbold.com. It was right on their front page. So now let's go here to this article. This article is on thestreet.com. And it's titled, Yellen sends a chilly message to U.S. banks. The KBW Regional Bank Index fell by nearly 3% from rumors that Treasury Secretary Janet Yellen said additional bank consolidations might need to occur, according to a CNN report. All right. Bank CEOs were told by Yellen that regional banks may need to be acquired by larger banks. Oh, let me tell you something. All of this is so suspicious. Oh, my word, it is. Just my humble opinion, it's very suspicious. And these smaller banks, this is one of the reasons they were so upset with the bigger banks. They always, but not, I won't say always, but the last year and a half, they felt like the big banks were trying to step on their toes and take their business. This looks like a part of it to me, but hey, I'm just a researcher. It's just my opinion, but look at this. Like, you don't want to help them. You refuse them the same help that you offer to larger banks. And you're just outright telling them that they may need to be acquired. It's unbelievable. It says Yellen met with JP Morgan Chase CEO Jamie Dimon. How many of you are familiar with Jamie Dimon? We've read quite a few things from Jamie Dimon. But if you know the history of JP Morgan, you know they like to gobble up those little banks. You know that. They don't want that competition. This is what I've read. Maybe it's inaccurate. This is what I know from the history. So Citigroup CEO Jane Fraser and Bank Policy Institute board members on May 18th in Washington. A total of 24 CEOs and executives were present at the meeting, the Treasury Department said. A readout given by the Treasury Department said Yellen discussed the banking system and, quote, reaffirmed the strength and soundness of the U.S. banking system. The readout did not include any talks about additional mergers and acquisitions. Okay, so they're saying that isn't the what people were going by was inaccurate. So be it. It doesn't negate that there's so many banks still at risk, that there's so many unrealized losses still on their books, and a variety of other things. Commercial real estate is still a huge sword looming over their heads. Alia iacta est. The die has already been cast. A little Latin for you there, if I got that correct. Alia iacta est. It says the Treasury Department said Yellen noted that the banking system, quote, remains well capitalized with strong liquidity, unquote. Is that so? Wow. To be able to say such a thing is unbelievable, in my opinion. The Treasury Department said, quote, she noted that the decisive federal action taken by regulators and the administration in March to protect depositors helped to strengthen public confidence in the banking system. I have to pause. That's unbelievable to say that. It helps strengthen public confidence in the banking system. All of the top professionals who have run polls have said that confidence in the banking system is at an all-time low. And that's from different polls over the last 2 months. You know, sometimes it just seems like some of these individuals at the head of some of these entities, I'm gonna say it like that, they're just completely delusional. It's to a very scary degree. I just want the people on the ground to be okay. You know, make sure you're protecting your capital. Know if the bank that you're dealing with, if you're dealing with a bank, is healthy. All right. Know all possible information that's going to keep you and your capital safe. Not advice. I can't give advice. That's just personally how I feel. All right. This article is from the commercialobserver.com and it's titled, How Regional Banking Consolidation Threatens Commercial Real Estate. Let's scroll down here and read this little tidbit. It says, 2 months after the sudden demise of Silicon Valley Bank and Signature Bank, the U.S. regional banking system is no closer to finding a healthy equilibrium than it was when the crisis of confidence began March 8th with the collapse of Silvergate Bank in California. The standing fear now among economists is not whether another regional bank will fold, but which larger institution will grow stronger from the latest FDIC-induced consolidation, where shotgun marriages between lending institutions sold for pennies on the dollar to their too big to fail overlords has become the feature rather than the bug of a federally engineered response. Quote, it kind of reminds me of the situation in 2008 when the question was, what's the next bank that's going to go down or who is going to short them, said economist Joel Naruff, president of Naruff Economics. Quote, the fact is we have an awful lot of concentration of funds in this economy, and the larger businesses get, the more exposure the economy has to these kinds of situations. Already, the system has seen JP Morgan Chase, with more than $2.6 trillion in assets, swallow First Republic Bank. Let's go to another quote here. It says, quote, like anything else, you don't want more and more banks getting bigger, so you have fewer and fewer competitors who provide liquidity for the economy, unquote, Naruff said. Quote, the risk of bad decisions gets greater because now the $100 billion bank becomes a $200 billion bank. The U.S. banking system has roughly 4,700 FDIC certified lending institutions, which have shrunk from more than 10,000 the system had prior to 1994 Regal-Neal Interstate Banking Act, which eliminated barriers to banks operating across the state lines and created a uniform set of rules for national banking. Regal-Neal really transformed the character of American banking, unquote, said Robert Hockett. Hockett wasn't surprised that the now failed SVB, First Republic Bank, Silvergate Bank, and Signature Bank were all headquartered in San Francisco and New York City. Quote, it seems to be long understood that the huge coastal banks are interested in making their money on the global financial markets, speculating on the tertiary and secondary markets, unquote, he said. For commercial real estate, the consolidation of regional banking sector carries numerous unintended consequences, and very few of them are good. For one, the small to mid-sized commercial banking houses, those holding between $1 billion and $250 billion in assets, serve as the guardians of capital for much of commercial real estate that we know. Says a recent report from Goldman Sachs determined that banks with less than $250 billion in assets account for 80% of commercial real estate lending and 40% of consumer lending. Moreover, in April the 12th report, JP Morgan Chase determined the CRE loans make up 28.7% of assets at small banks compared to only 6.5% at big banks. You see where this is going here? It's all very, very suspicious in my humble opinion. Under bank consolidation, quote, you will be more subject to a corporate machine, unquote, said Christopher Thornburg, founder of Beacon Economics. Quote, people in a corporate office 2,000 miles away start making decisions on whether you get that loan when you feel that decision should be based on someone working in your same city, unquote. All right, so now we're going to end off here with a little bit of silver news. All right, so this article is from coinnews.net. It's titled, The Perth Mint Sees Strong Silver Demand in April. Sales of Australian bullion in April diverged, according to figures from the Perth Mint of Australia. Gold products experienced a decrease. Well, I think they collected a lot of gold very quickly after the banking crisis recently. And they probably will do it again if the banking system is going to continue to have problems into the future. It looks like they may. We'll see if that's true or not. And so I think that gold was going to experience a decrease at some point, and the price is going to have a little bit of a healthy pullback. Of course, yeah, we hit all-time highs. We're doing very well. It says, while silver products saw the highest gains in 6 months. Let's scroll down here. It says in April, the Perth Mint sold a total of 80,541 ounces of minted gold coins and bars. This represents 6.7% decrease from the prior month, which had the highest sales since November, and a 7.1% decline from April of last year. Year to date, gold sales, they're talking a lot about gold. They're supposed to be talking about silver. Gold sales total 272,343 ounces, which is 20.4% lower than the 342,298 ounces in the first 4 months of last year. The mint silver coins and bars sales for April totaled 1,947,743 ounces, which is the highest monthly sales figure since October. This represents an increase of 6.8% from March, but a decrease of 8.1% from April. Yeah, people were buying silver also at that particular time for the same reasons, the banking crisis and such like that. So silver has very little volatility, and you get it in at a low, which is hilarious. If you look at the actual charts of silver, you get in at the low, and it just holds its value very, very well. Has much less volatility than, let's say, platinum for sure, and gold as well. Gold has some healthy volatility, So everything's looking good in my humble opinion. The future is very bright for silver, gold, and platinum, especially if we continue to go into more harsh economic circumstances, which I do believe is highly possible given all of the different data that we've been going over. But I think that people who have prepared themselves well or are preparing themselves well will have much of a less hard time. You may be able to skate through without having much problems as we go through this depression/severe recession that may be coming and that we're at the beginning of, I believe, right now. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.